How to improve the Elliott wave count like a pro. How to improve the Elliott wave count like a pro. Good morning, good afternoon, and good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Elliott Wave Trading, our website is www.24elliottwaves.com. The title of the video is how to improve the Elliott wave count like a pro. All right. There are three things that we can use to improve, the Elliott wave count. At the end of this video, one should be able to understand, the factors that one can, pay attention to, to improve, the Elliott wave count like a professional Elliott wave, a practitioner. I recommend to traders to watch the full length of this video so they may understand clearly how to improve the Elliott wave count like a pro. Today is the 2nd of November 2015, and the time in London is 10 minutes past 11 a.m. In New York, 10 minutes past 6 a.m. now, So right now, as you can see, the clock in New York also went back 1 hour. So now the time difference between London and New York is 5 hours. All right, so you want to understand that. Very often, very quickly, I need to mention to traders that when the clock goes back, the market is usually bullish. This is just a belief in the market. So today, some trader will be expecting the market to be bullish. We will see. It's not always the case, but we will see whether the Nasdaq 100, the Dow Jones, the major indices will be bullish today. All right. So do not take this observation as a science. Let's get started. All right. So I'm going to start counting Elliott wave on my chart. All right, I'm going to go very fast. So fast Elliott wave, following our guideline. This is the fast Elliott wave. All right, pay attention. All right, I'm going to call out my fast Elliott wave. Into green. Green can be visible. Yes, red. Use red. No, I will not use red. Orange. All right, that's the orange line from here to here. That's the fast Elliott wave. Let me highlight my first Elliott wave on the chart. So I'm start counting Elliott wave here, and I will show you how you can improve your wave count. All right. So from here to here, that's my first Elliott wave. All right. This is my second Elliott wave. I'll color it now into red. All right. Pay attention carefully, my friends. Stay tuned. The financial instrument that we are analyzing is the pound Australian dollar, the British pound Australian dollar currency pair. Now, there was a trader that asked me if I can record Elliott wave video analyzing, the forex market. So this is it, one example here, trading forex, because we have more traders that trading forex. But you have to understand there are other traders that trading stock. That's why I record video also analyzing, financial market stocks. All right. So this is the forex. So a pound Australian dollar currency pair. So this is my second Elliott wave from here down to this point. I will also highlight my second Elliott wave. That's the red line here. And my third Elliott wave is from here all the way up here. So I will also highlight my third Elliott wave. I will call my third Elliott wave in turquoise. All right, turquoise, beautiful color. And my fourth Elliott wave is from here down to this point here. So I'm running a bit out of color now. I will use a pink to please ladies that can trade for us. All right. And also here we are. So I will highlight also my fourth Elliott wave. Right there. Let's zoom into it so you can see clearly what I'm doing here. So first Elliott wave from here to here. Second Elliott wave from here down to this point here. And my third Elliott wave from here up to this point here. And my fourth Elliott wave from here to here. All right, on the weekly chart. So I'm on a weekly chart. So it's very important for traders to know exactly which time frame I am on. I'm on the weekly chart of the British pound Australian dollar currency pair counting Elliott wave. And my fifth Elliott wave, as you can see, it went up all the way here. If you pay attention to this candle here, see, it went up all the way here. Okay, so I will put it there. Okay, something let me say here. Okay, that's fine. Let's leave it there. But in fact, you can see the price went up all the way here. I will talk about that very shortly. So I will call up my fifth wave into black. Okay, that's the black line there. And I will also highlight my fifth Elliott wave. Job done. All right. So first wave, second wave, third wave, a fourth wave, and a fifth wave. Now, talking about how to improve the Elliott wave count like a pro, the first thing that I want traders to understand, in order to improve the Elliott wave count, one must learn to master the characteristic of each Elliott wave. All right. So go to www.24, okay, elliottwave.com or www.youtube.com/user/24 Elliott waves. So I'm referring traders back to 24 Elliott waves YouTube channel. If you are watching this video, you are already on 24 Elliott wave YouTube channel. Hit the subscribe button before it is too late. All right. So here we are, first wave, second wave, third wave, fourth wave, and the fifth wave. In order to improve the Elliott wave count, the first thing one must understand the characteristic of each wave, all right? How does the first Elliott wave behave? What are the characteristics of the first Elliott wave? It's different from the Elliott wave rules, all right? So one of the Elliott wave rules is that the second wave, okay, should not cancel the first wave, all right? Very important. The fourth wave should not overlap the first wave. These are few Elliott wave rules. But what I'm talking about here, I'm talking about the characteristics of each wave. It's different. So this is about how the first wave behave. What are the characteristics of the first wave? What is the identity of the first wave? Or we can also say, what is the DNA of the first wave, DNA of the third wave, DNA of the fifth wave, fourth wave, and so on. So in order to improve the Elliott wave count, one must understand the DNA of each wave. Note it down, all right? Very, very important. So I have come a wave, so some trader may say, George, your wave count is completely useless. And as always, I say to trader, this is my wave count. And the most important thing is not to violate, okay, the three market pattern, okay? So looking at this chart on a weekly chart, some traders may say, Joe, this is not correct. So pay attention. So the first thing to improve, okay, our Elliott wave count is the characteristic. I will dwell on that for a minute, my friend. So the characteristic of the first wave, because if you are not able to identify the first wave, or if you label wrongly the first wave, your wave count is likely to be wrong. So it is too important, it's very, very important for traders to learn to master at least the characteristic of the first wave, following our guidelines that we have talked about at 24elliottwave.com. Click on wave count guidelines. The first Elliott wave must break resistance on the left-hand side. All right. So this is one of the characteristics of, okay, the first Elliott wave must break resistance on the left-hand side. If we label a wave like the first wave, but it doesn't break a resistance on the left-hand side significantly, we can put a question mark on that first wave. We say, okay, let's label it now as a first wave, and let's see what's going to happen. All right, so you just put it there, say, okay, all right, maybe not, okay? So this is my first wave. I'm checking on my left-hand side. Look, left-hand side, you see my cursor? There was a resistance here. So where are the resistance on my left-hand side? Okay, here. There was one here, okay. Resistance here. Price, you see the price change direction, went up, change direction. So it's a resistance, okay? So if it went up and changed direction, it's a resistance. So resistance, resistance, resistance. And this wave here that I labeled first wave has broken all this resistance here on my left-hand side. This will put a smile into my face. So I know at least it has at least one of the characteristics of the first wave. I will recommend to trader to watch every video, all right, so steadily, all right? I'm not saying one day, all right? If you have time, if you like our video, watch our video and you understand the characteristic of each wave. I will not go into details about every characteristic, but in order to improve the Elliott wave count, the first thing one must understand is the characteristic of each wave, all right? So here you can see that the first wave has broken resistance on the left-hand side, which is great stuff, okay? The second wave here, okay? For the second wave, I don't want to go into detail about the characteristic of the second wave. The second wave, one of the characteristics of the second wave is that very often, if we are in an uptrend, the second wave should find support. The second wave should, stop somewhere near the 50% of the first wave. Sometimes you will see that it goes down to 61.8, but if you're going to have a strong bullish trend, the second wave very often will stop exactly somewhere in the zone of 50% Fibonacci retracement level of the first wave. Don't take this as a science. It can go down all the way to 61.8, but it shouldn't cancel the first wave. That's the general rule. But you have to understand what is taking place here. For a bullish trend to be strong, the second wave shouldn't go too deep. Going up to 88.2% of the first wave. Normally it shouldn't, but sometimes you see it for different reasons, talking about the economy news, which can change the dynamics of the market cycle, the market sentiment. Various reasons can create a bit of mess in the wave count. But generally, for a healthy bullish trend, the second wave very often will end somewhere near the 50% of the first wave. 50% Fibonacci retracement of the first wave. This is not a sign. This is not happening all the time, but this is what we should expect. In a downtrend, the same verification should be true. The second bearish wave should retrace somewhere near the 50% of the first bearish wave. If the bearish momentum is quite strong, people are willing to sell. The second wave will find it very difficult to go beyond the 61.8%. Talking about the zone between 50% and the 61.8% Fibonacci retracement level of the first wave. All right, but this is not an exact science. So this is my second wave. The characteristic of the third Elliott wave is that the third Elliott wave is dynamic. Look at the candles. So one thing I try to do to improve my wake up, I check the candlestick bar during the third wave. Are they strong bullish candles? Yes, they are. Look at this candlestick bar. I'm on the weekly chart. Are they bullish enough? So all these candles, they are quite bullish. Many bullish candlestick bar here. We didn't see even any bearish candlestick bar because you see the dark green are bearish candlestick bar. Look at this section. Bullish, 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 bullish. The third Elliott wave is a dynamic, should be strong. Boom, 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 boom. Fast momentum, strong momentum, going up. All right. And the first Elliott wave, one of the characteristics of the third Elliott wave, it must go above the 138% Fibonacci extension level of the first wave. Now, if you don't understand what I've just said, it means that you must go to www.dayprotrader.com and click on Fibonacci extensions. In fact, I will link this video to another video that I recorded recently talking about live day trading using a Fibonacci extension. Let me write it down so I don't forget. Using a Fibonacci extension. I'll put the link in the description section. I highly recommend to trader to watch that video so you may understand the importance of the 138% Fibonacci extension level. So this is my first wave from here to here. One of the characteristics of the third Elliott wave, in normal condition, my friend, should go above the level, should find support above the 138% Fibonacci extension level of the first wave. So this is my first wave from here to here. I apply the Fibonacci extension to it, drawing it from the top to the downside. I have my Fibonacci extension. And the line here, which I'm going to color now into pink, all right, right here, so you can get it right, as the 138% Fibonacci extension level. So as the price breaks above, okay, the high of the first wave, the next challenge for the third Elliott wave is to find a support above the 138% Fibonacci extension level of the first wave. This is just one little verification that one can check, one characteristic of the third Elliott wave, and should find a support. You see the tail of this candle here? You see the tail of this candle, and that's why you see all this tail here. Okay, pull back, break above, retest, and yeah, right here, and continue above it. Just a quick verification. As I explained to you, there are more characteristics for the third Elliott wave, but for the purpose of this video, I just want to highlight to you that if you want to improve your wave count, you must check first the characteristic of each wave. So the third Elliott wave very often is the longest wave. Okay, this is one of the Elliott wave rules. Generally speaking, it's the longest, not always, but generally speaking, is the longest. But one of the Elliott wave rules is also that it stated that the third Elliott wave should not be the shortest impulsive wave. So what are the impulsive waves? First wave, third wave, and the fifth wave. The third wave should not be shorter than the first and the fifth wave. Let's move on, otherwise we're going to stay here for too long. All right? So this is my third Elliott wave. Now, the fourth Elliott wave, the characteristic of the fourth wave is that it's usually a shallow, not too deep, because the bull are controlling the third Elliott wave. Is dynamic, is strong, and during the third Elliott wave, the fundamental, one must always check the fundamentals. Don't be a technical trader alone during the third Elliott wave, otherwise you'll be surprised. Okay, so let's move on. One of the characteristics of the fourth Elliott wave is usually a shallow wave, not too deep. Look at this. Pew, one down. You see? Nice, nice. If the fourth Elliott wave is extended, is prolonged, we are likely to see a fifth wave that is extended. We can forecast that the fifth wave will be extended if the fourth wave is prolonged, talking about the time period it takes for the fourth wave to be completed. That's another matter. Check our videos, okay? Because you're my friend, okay? All right? In your own time. And the fifth wave. One of the characteristics of the fifth wave, okay? I would like to apply an Elliott wave rules in this case, all right? So for the fifth wave, I will apply instead the Elliott wave. If the third Elliott wave is extended, you see here it's extended, yes or no? Okay, it's extended, it's dynamic, it's strong. There's a high chance there will be equality. My apology to trader, my phone is ringing, but hold on please, my friend. Let's pause the video for a second to avoid this noise. Great stuff. One of the characteristics of the fifth wave is that if the third wave is extended, all right, there is equality, there will be equality between the first and the fifth wave, which means talking about either the magnitude or the length of these two waves, talking about the first and the fifth wave. So that's why I said to you, watch our videos so you may understand what I'm applying here. So this is the length of the first wave, my first wave. Here, this is my first wave from here to here, yes or no? If the third Elliott wave is extended, there's a high chance, okay, without cheating, okay, I'll use conservative measurement, something like that, okay? There's a high chance that there will be equality between the first and the fifth wave. Look, now you understand why I was telling you to pay attention to this candle here. You see this candle that went up. Am I talking to myself? I'm talking about this candle here that went up all the way here. You see how it stopped almost at equality between the first and the fifth wave. In this case, I'm using the length of the first wave. So when we are talking about equality between the first and the fifth wave, we are talking about either in length or in magnitude. So in length, what I usually do, sometimes it's difficult to compare the length because I just measure the price went up from here to here. I just draw the line in straight, okay, in the direction of the first wave. That's what I did here, okay, right here. Sometimes it's not easy to do that. You will find out soon, okay? So you can see that when I place it here at the beginning of the fifth wave, you can see that the traders, smart traders, push the price to the equality between the first and the fifth wave. This is about Elliott wave forecast. But when we are talking about the magnitude of the first wave, we are talking about the height. So if you draw like a straight line, vertical must be vertical. So from the beginning of the first wave, all right, to the end of the fifth wave, the line should be vertical. You see this line here? It's vertical. But the first one that I draw is the length is in a direction, apply it to the direction of the prior. This is what I call the length of the first wave. So we can compare the length or the magnitude. The magnitude is the vertical line from the beginning of the first wave to the end. How much the price went up during the first wave. So we put it here vertical. You see here? It's almost the second line. Let's color it now into orange so you can see the magnitude. I will color the magnitude of the first wave to orange. You see this is the line here. Again, the same zone where they push this candlestick bar through. All right. Let's move on. We are talking about how to improve the Elliott wave count like a pro. And I want you to understand these things because you are my best friend. The second thing that we must know or understand if we want to improve the Elliott wave count is the mind game in wave count. So you may say to me, George, you are going in a territory that is a bit exciting, but I'm not interested in it at all. So I'll say to you, fine. So I will refer you to www.24elliottwave.com and I will say to you, click on mind games. There is a mind game in the wave count. So you say, George, I love you so much, but I don't agree on this one. Okay, fine. Why we should care about the mind game in the wave count? All right, before you switch off, there are three things that we need to verify. The first one is the characteristic of each wave count. The second one is the mind game in wave count. The third one, I will tell you when I finish with the second one. All right, so why? Why should we care about the mind game wave count? Okay, so suppose some traders, while we are talking about the mind game in wave count, is to try to understand what other traders, wave practitioners, how are they likely to count their wave. This is what we call the mind game in wave count. So I count my wave like this. Now the next thing I want to check, what other traders are likely to do. All right, so some people count their wave wrong, especially some of, big market participants, if they count their wave wrong, they will force the price in one direction or the other. So I want to know whether they will see exactly what I'm seeing or they are seeing something else. But if I'm not violating the market pattern, I don't have to worry about these people. All right? Okay? So we see that the pound Australian dollar you can see that there was a bearish season, in fact, from 2007 all the way to 2013. Why? Why the pound was falling against the Australian dollar? Because the Federal Reserve was devaluing the US dollar, and there was outflow of capital from the United States to other parts of the world, and those money went into commodity. So from 2007, in fact 2008 to 2009, the commodity market was booming. So talking about the Australian dollar, it's a commodity currency. So gold was going up, and we know that when gold is going up, okay, it's a market indicator for the forex market. If gold is bullish, the Australian dollar is not likely to be bullish. If the commodity market is bullish, the Australian dollar is likely to be bullish. So during that period of 2007 to 2013, the Australian dollar was going up, was becoming very, very strong against other currencies. Therefore, the pound was weakening against the Australian dollar. So talking about currency pair, we are comparing here the Australian dollar and the British pound. The British pound was weak in relation to the Australian dollar from 2008 to 2013. Here we are. Therefore, this currency pair was bearish. So this is the market pattern indicating to us that the bearish momentum is strong. Can you see why we shouldn't violate the market pattern? So even if you don't know what's going on, the market patterns will tell you, okay, You know that I talk about this 100 times, so don't get fed up with me, but I will talk about it in every video, okay? So after the price came out of the bearish channel, some of my wave count colleagues, all right, will count the first wave. You won't believe it, they will count it like this. Or they will count it like this, okay? Some will do like this, some will go like this. All right? So suppose, my friend, they count it like this, okay? So they say, okay, this is the first wave up to that point. So they say, okay, now the third wave is underway, okay? So they say the third wave has begun from here. They say first minor wave of the third wave, second minor wave of the third wave, and they say third. Okay, where are we? Am I? Okay, I don't want to lie to myself. Okay, let's see clearly. So they will say, okay. All right, they will say, okay. Third minor wave of the third wave, and the fourth minor wave of the third wave, and the fifth minor wave of the third wave. Are you with me? So they are, here we are. So from here to here, this is their third area wave, which has been divided into 5 minor waves. Okay? So first wave, their first wave, not mine. So some talking about a mind game, going to the mind of other area wave practitioners. They say first wave, second wave, and then they say third wave from here to here, which has been divided into 5 minor waves. Okay? All right, so here. So they will say, all right, George, what do we have here, George? They will say to me, okay, probably they will say, all right, George, this is the fourth wave down to this point. Let's color it now into turquoise. So they say, George, this is the fourth wave. Are we violating? Is it in the? It's not in the section of the first wave. No. So they will say this is the fourth wave, and this is the fifth wave that is also extended. All right. They may say this is the fifth wave that has been extended, but it's wrong. If they say this is the fifth wave that has been extended, I don't know what they are talking about, because you can see that this, if they counted this one, 1, 2, 3, 4, look at this fourth one here. The fourth one going to the section of the first wave. So we can't count this one as a fourth minor wave of the fifth wave. We can't, because you see, going into the section of the first wave. So I don't know probably what they are thinking. Or they may say to me, George, you stupid boy, the fourth wave, okay, has ended here. So they say, blah, 1, 2, blah, 3. All right? So they say, blah, 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 is here. So they say, all this section here, George, this is the fourth wave. Okay, let's think that way, okay? You have to understand what we are doing here. We are trying to go into the mind of other traders to see how they are counting their wave. All right, that's what we are trying to do. So in order to improve the area wave count like a pro, we want to also understand how other traders are likely to count their wave, so then we may, okay, understand the decisions that they are likely to make at each point, because we are going one step at a time. All right. So they may say first wave, second wave, third wave up to this point, and fourth wave somewhere here, and we are now in a fifth wave. Okay, great stuff. So if we are all in a fifth wave, it's not bad decision if I'm counting this as my fifth wave. So they are thinking probably their fifth wave is ending now, and I'm thinking also that my fifth wave is ending. But their wave count, they say, is from here all the way up here. I disagree completely, because, my friend, following our guidelines, my friend, on the weekly chart here, you can see that the price, my friend, look at this. The price went down like this, but don't laugh about it, okay? Don't mock other traders. Don't do that, okay? So price went down, you see. It went down from here all the way here and went back up here. This is the pink line that we have here. That's what we call a cycle point. A new cycle is likely to begin from the cycle point. It doesn't happen in the hole. You understand? Following our guidelines, the cycle point is the pink line here. Go to www.24area, click on wave count guidelines, watch every video. Even if you don't understand my accent, okay, pay attention deeply, all right? This is what we call a cycle point, the pink line here. So a new cycle is likely to begin. The first area wave, talking about our guideline, usually start from a cycle point. Sometime, my friend, after a downtrend like this, following our guideline of a wave count, what I recommend to traders to look for in order to identify the first wave, I would prefer traders to look for a pattern like this. So price was in a bearish channel down, okay? And then it kick up a bit like this. People say, uh-oh, a new cycle has begun, and we want it, okay, to form a kind of a double bottom. If you are so desperate to count wave, you may start from here. After we see validation of a support level, you may decide to count it here. Or, if you are a little bit conservative trader, you can take it above the knot of the double bottom pattern. The opposite is also true in an uptrend, when the price will form a double top. But I don't like to count my wave when the price is come out of a channel like this straight away. You see, following our guidance, sometimes you will see that it fails, or people will think that a cycle has begun, but it doesn't. Okay? Let's not dwell on this too long, okay? The third thing that one must check or understand if one wants to improve the Elliott wave count like a pro, this is one thing I want traders to understand, okay? The Elliott wave count is dynamic. Let me say this another time. The Elliott wave count is dynamic. I will say it for the third time so you never forget this. The Elliott wave count is dynamic. What do I mean by that, my friend? So very often, that's why I don't do Elliott wave forecast for traders and say, blah, 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 go and sell, go and buy. I don't do that. I do not do that, okay? What I do, I teach traders to do it themselves and to make decisions, paying attention to the market pattern and the economy news. In my view, this is the best way forward. Now, this is what the Elliott wave practitioners themselves are doing if they are recommending wave count. So if, for instance, you subscribe to wave forecasts, those who are the best wave forecast, okay, analysts, what they do something that they call updates. So they give you Elliott wave forecast, they sell you buy X, blah, blah, blah. But sometimes you will receive some emails where they will update their wave counts. They will tell you, due to this, blah, 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 now this is what's happening. There is no wave count that is set in a stone, and the wave count is dynamic. Why? Because the price is moving constantly, and there are other elements that can change the dynamics of the market. So today, I'm telling you now, this is my first wave, second wave, third wave, fourth wave, and a fifth wave here. Today, on the 2nd of November 2015, this is true. Suppose, my friend, the market opened today and we see a pure price bring it down here, all the way down here. What has happened? Suppose the price come down all the way here. What has happened? Our wave count has been cancelled. All right, has been cancelled. So that's why we say to traders, if the second wave cancels the first wave, what do? We must restart counting the wave. So when you count Elliott wave, now, in fact, I would say to traders, sometimes what usually takes place is that a trader may disagree, or sometimes an experienced trader may say something, and then trader will disagree or get upset for different reasons. But the good news is that if what the experienced trader is saying is true, very often trader will come back and say that this is true. But what I'm trying to communicate to traders here is that please do not dump this what I'm saying here. Do not dump this third bit. The wave count is dynamic. So when we count Elliott wave, we leave it as it is and we work step by step. Okay. So you can see that when we were here, if I count this first wave, we leave it as it is. We leave it on the chart. We say this is our first wave. Okay. All right. So what usually happens, trader may go, for instance, place order here at 61.8% Fibonacci retracement level or the first wave, expecting to buy. If everything works beautifully, that trader may get rewarded. Okay, so we may say forecast first wave has ended here. We see it's coming down. We see probability that the second wave will end in a zone of 50% and 61.8% of the first wave in normal condition. But this is just one step at a time. If the second wave went down all the way here and canceled, in fact, if the price goes down, so we were here, we count our first wave, if the price went down all the way here, what are you going to think? You're going to say, oh, this is just a mumbo-jumbo wave count. But it's just because the wave count is dynamic. So it constantly now, we restart again. So our wave count is in the present time, not in the future time. It's in the present time. So we are moving one step at a time. Things like the economy news. Okay, I want to show you something. Okay, so you may understand a little bit about the economy news. Okay, I want to bring on a financial instrument, talking because we are analyzing the forex. I want to bring on now a financial. Okay, hold on, please. Okay, my friend, 1 second, because I don't want you to miss this important point. Okay, stay with me, please. You see how it is? This is this candle here. You see here? This is economy news that is made by the Swiss National Bank when they stopped capping the Swiss franc against the euro. On that day, a lot of hedge funds, big institutions lost money, even retail trader people wiped out their trading account. This is what I meant by the economy news that can change the dynamics of the market. I will show you another one, my friend. Another one, I'll show you now, okay? So you don't discount, okay, the economy news, all right? Euro dollar, okay, recently, euro dollar on the hourly chart. Let's go and see it. Here it is again, a tall candle. The Federal Reserve keep the rates unchanged. And the market reacted funnily. And look at this. Phew, instead of the euro going up, the euro went down. Why? Because people are buying the dollar and selling the euro. They don't want the price to be up here and they bring it down. So this is just a few examples about how the economy news, the market realities can change the dynamics of the markets. That's why it's so important for traders to understand that the wave count is dynamic so they don't get into trouble at all. So in order to improve Elliott wave count, I go back now to the weekly chart. The wave count is dynamic. We have the Elliott wave rules. We have the characteristic of each waves. We have the wave count guidelines. But as we are applying these things, we must understand that the wave count is dynamics. So we are here now. So I will give you another example. Okay. So let's move on now. You say, John, tell me something more. Okay. You say, John, forecast something. What do I need to do? All right. The first thing I want to tell you, apart from the characteristic of each wave, which we are talking about, okay, the first thing that we must tell you if you want to improve our wave count, we must also check the characteristic of the financial instrument that we are trading. Each financial instrument has its own characteristic. All right. Now, I would like to mention to traders now that the pound Australian dollar is not for children. So, if you are thinking to buy or trade the pound Australian dollar, I would like to discourage you not to do it unless you know exactly what you are doing. It's volatile and the risk is quite high. But I said it now, but if you go and trade it, you know exactly what you are doing and you have experience to trade it. So this is about the characteristic of the financial instrument that one is trading. One must understand the characteristic of the financial instrument one is trading, okay? So let's move on to the next step. So I have counted first wave, second wave, third wave, fourth wave, and fifth wave for the pound Australian dollar, all right? So we at this point in time, I say the fifth wave has ended here. At this point in time, with the information that I have, that's all I can say. Talking about the wave count is dynamics. If the price goes above, okay, the high of the fifth wave, the next thing that we do, we must draw the 138% Fibonacci retracement level above of the fifth wave. You understand? So here we count first wave, second wave, third wave, fourth wave, fifth wave, all right? If a correction is going to begin, the correction should not go above the 138% Fibonacci extension level of the fifth wave itself. This is just one of the things you need to know so you can trade carefully. Talking about the flat correction that usually propel the price back above the high of the fifth wave, we draw the level of 138% Fibonacci extension level of the fifth wave to as a limit that at the correction shouldn't find a support above the level of 138% Fibonacci extension level of the fifth wave itself. Okay, I'm going to go now, I'm on the weekly chart. I'm going to go to the monthly chart because I want to draw. So this is, if you look carefully on my chart, let's move some line. This is my fifth wave from here to here. That's the black line here. You remember the black line? So I'm going to apply a Fibonacci extension level to my fifth wave. That's it. And the 138% Fibonacci extension level is here. Let's color that into red. So the correction, if this is a correction, that's why I said to you the wave count is dynamic. If this is truly the end of the fifth wave on this weekly chart, so far we were stuck on the weekly chart. We didn't go to the monthly chart, yearly chart to validate our wave count. We were stuck on a weekly chart talking yes or no. It's a trading mistake, okay? Yes or no. Now, but with the information that we have here, first wave, second wave, third wave, fourth wave, fifth wave, if this is a correction that it is underway, that correction shouldn't find a support above the level of 138% Fibonacci extension level of the fifth wave, which is at the level of 225.00. As I mentioned to you, the pound Australian dollar is not for children. So it's up to you what you want to do with your money. All right? Okay? So I will remove my last drawing on this chart and I will go back again. So now this is it, the level of 225.00. We cannot see it on the weekly chart, but I'm going to go back to my weekly chart. Okay? So on this weekly chart, so we counted first wave, second wave, third wave, fourth wave, fifth wave. We know now that in order to improve the Elliott wave count, we must, okay, understand the characteristic of each wave. We must also understand the mind game in wave count, and we must also understand that the wave count is dynamics. Very, very important. So now we counted 5 waves, so what's going to happen now? The first thing that they are watching, somebody said to me that the correction will bring the price always below the fourth wave. Not always, can go beyond, okay? So now, we see now a pullback, okay? This one, you see this one. Look carefully. Talking about the violation of the market pattern, which is what is the main support level? This is this trend line, the green line, okay? So as the price pulled back, we're talking about correction here. Pullback didn't come out of the channel at all. You see you see this channel here. This one. This is about the wave count is dynamic. So here you see it pulled back but didn't come out of the channel at all. Okay, we may say the channel didn't change. That's we can't deny it. This trend line here that I'm drawing now, the blue trend line here, is kaput. So it's the price trying to come back and retest it here. So, okay. So if you're talking about a flat correction, maybe not, what's going to happen? We will see. But one thing I need to mention to you, as you see now, you counted 1, 2, 3, 4, 5 wave, it ended here. And the first price, you see, it went down, this action price went down like this. The level that the professional are watching is the 50% Fibonacci retracement level of this move down. The first correction, the first part of the correction. So when you see the first part of the correction, you will draw the Fibonacci retracement level. I have another line that I need to remove. We will draw, where is my line? The Fibonacci retracement level, so the correction has begun here, you see here, went down. The first part of the correction, we want to highlight the 50% Fibonacci retracement level of the correction. So this is the 50%, that's correct. From here to to here. Yes or no? Okay. So we have our 50% Fibonacci retracement level now. Now, remember what I said to you. We want to go always into the mind of other traders. You can see that the price went up all the way here. This one, this candle here. If you adjust it to that, okay, from the top all the way down here, okay, it went up all the way here, the fifth wave, and went all the way here, okay. So our now, if we adjust that line, the first 50% is here, and the price is above it. Now, if you adjust our line, bring it to the top, we'll notice that our 50% is now here. Okay. Can you see yellow on the chart? Okay, you can see yellow color in orange. That's the orange line here. So what I want you to understand is that when we see the first part of the correction, we want to highlight the 50% of the correction, the first part of the correction. The price now in the zone of the 50% Fibonacci retracement level of the first part of the correction. All right, we need to give a priority to bullish signal above the high, above the 50% of the first part of the correction, and give priority to bearish signal below the 50%, okay, Fibonacci retracement level of the first part of the correction. You can see that if you look carefully on this chart, I might talking to myself. I have too many lines now. The first 50% that I've drawn is the green line here. You see here. As the price was trying to come there, you see some traders sold it here, this candle here. Price went to the 50%, some traders sold it here. And price went down, okay, but closed near the opening price. You see, am I talking to myself? This one here. Okay. Now, the price went above our first 50% Fibonacci retracement level and the final support, and then it continued to go up. Going into the mind of other traders, as we adjust our Fibonacci retracement level, we have a new 50% Fibonacci retracement level, and here we are at 21604. Priority to bullish signal above, and priority to bearish signal below. I did not say buy above or sell below. All right, what I'm saying, apply a top-down trading method to buy above and apply a top-down trading method to sell below. I will also put a link in the description section about a multiple time frame trading method. Okay. Ladies and gentlemen, I do not want the video to be too long. All right. We can say more about this. All right. But for the purpose of this video about how to improve the Elliott wave count like a pro, the first thing that one must understand is the characteristic of each wave. All right. The second thing one must understand is the mind game in wave counts. And the third thing is that the wave count is dynamic. We are counting wave one step at a time without assuming anything, and we apply a top-down trading method, okay, to take the trade without assuming anything. All right. At the end of the day, the wave count is a guide. It's not a science, but it allows us to navigate through the market and to forecast the next price move. But these are just okay guidelines that we follow, okay, to make excellent decisions. But one must always confirm, okay, the wave count with a direct signal, okay, waiting for the market to give a clear-cut, okay, signal before we enter the trade. If you like this video, please give us the thumbs up. If you dislike it, okay, please give us the thumbs down, all right? If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our video, feel free to subscribe to our channels. We are the TSTW24 traders talking about how to improve the Elliott wave count like a pro. Okay. Until the next time, enjoy yourself and be very happy. Speak to you soon.